Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors. January 22nd, just after the close. We speak about it often. What can go right? What can go wrong? NASDAQ 100, new highs. What can go right? What can go wrong here? Let's concentrate on three names. Apple, Microsoft, Amazon. Where are they? They're back to flirting with September's highs. The market has moved higher, specifically small, mid, and the NASDAQ and the S&P, without these names over the last quarter. As they've reached this region where they got sent backwards in September, it will be very important to see if they can go forward. What's been carrying the NASDAQ? Tesla, PayPal, Nvidia, great moves. Google, solid move. Google went through its September high like a knife through butter this week. Be very interesting to see if these three big powder kegs get a bid here. That could cause some nice strength in the coming weeks. What can go wrong? Similar to September, they start to backtrack. By the way, if you're long these names, and we're long these names in different sizes, having a 4 or 5% retracement off of the kind of moves they've given us over the last 18 months is fine. We just want to see that demand come back in. Banks. Spoke about banks for really the last month. Got great news in the 2 to 10 year yield curve steepening. Why is that great news for the banks? Borrow cheap, lend dear. Rates don't have to be high if you're borrowing at zero. Fed Reserve. Let good, solid balance sheets and earnings numbers boost buybacks, boost dividends. Allow buybacks, boost dividends. Very, very structural good news for the banks. And they come in with solid names, solid earnings, especially the good names. Not every bank gets tarred with the same brush. JP Morgan, solid as a rock. What happened? They sold off. Everything baked in. One of the more obvious sell the news trades of the last couple of years. They pulled back 5-6%. Very interesting spot. We'd like to add to our KBWB in U.S. equity, and I'd like to add to some JP Morgan on any further weakness in tactical trend. So those are two things we're looking at. What did we do this week? We're quiet this week, sat on our hands for the most part, except for one great trade. DRK, Dave Kotok, fondly known as DRK in our shop, had the trade of the year, almost the trade of the decade in the triumvirate that I've been discussing with you really for the last 6 or 8 months. TAN, FAN, FO. TAN is solar, FAN is wind, FO is water. TAN in particular, which is loaded with semiconductors, that move is 350% this year. We've been in that move at various stages. By the way, some of that pre-2020. So it's a wonderful move. We had to feed the ducks. When they start quacking, as loud as they were quacking this week, we had to feed them a little. We peeled off a small piece of our position, less than 10%. Well, let's call it 10 to 15% of our position. We keep a core position in TAN and see what happens with those semis. Remember, it's a solar basket, but it's really a tech basket. So David, fantastic trade. We'll always feed the ducks, but we'll keep a core position here. Have a great weekend.
Good afternoon. I'm John Mousseau. I am the President, CEO, and Director of Fixed Income at Cumberland Advisors. It is Friday afternoon on January 22nd at the close. Very quiet week in bonds as we welcomed a new president and his administration into office. 10-year bond finished at about a 109, up a tick. 30-year bond, 185, up a couple of ticks. Very quiet. Muni yields down a tick. Decent flow into munis with very big demand. Bond fund flow is good. So overall, a very quiet week. More importantly is, how do you start to look forward? We know that President Biden is going to be laying out stimulus packages. There's going to be state and local governmental aid coming. There will be an infrastructure plan coming. All of this is good for municipal credit, as you can imagine. We think an infrastructure plan is very good for municipal credit, not only on some of the projects that it finances that we need, like bridges, tunnels, roads that are falling apart, but also in the fact that it will soak up some of the unemployment that's coming from some of the service sectors. So we think that's very good as well. If you really hark back to the last time you saw a very large public works administration in the Roosevelt administration, many of those projects are still with us 85 to 90 years later when you think about things like the Hoover Dam or the Lincoln Tunnel or things like that. So infrastructure is a very big part of this as we go forward. We think that's important. A little bit about interest rates. We think eventually some inflationary expectations build up as some of the spending builds up. Since November and the election, 10-year bond is up about 40 basis points. That's not that unusual for a new administration when you're getting stimulus like this. When we've looked at other presidents coming in that have been changed in administrations, the record has been actually, with the exception of Trump where yields rose a lot, has been yields coming down over the first few months of an administration out to, say, March. And that would have included President Obama, that would have included President George W. Bush, and it would have included Bill Clinton. In all of those cases, you were really starting to come off what was a recession. We had a recession that was in '92. We had certainly the tech bubble melting down in 2000. And of course, we had the Great Recession when President Obama took over. So in all those cases, yields dropped. So we're paying attention to history here as well. Next week, we're going to have initial jobless claims. We'll be looking at that. We'll also be looking at GDP for the fourth quarter. So we'll see you next week.